Good morning. I'm Ross from Lifetime Accounting, and I just thought I'd go through what the investment boost was that was announced in the budget yesterday. So I'm going to go through very quickly. It's only be about 5 minutes. Go through quickly the rules for business. Is it worth it or not? Yeah, is it worth rushing out and buying a new van tomorrow? You'll see the numbers. Residential rental properties and then commercial properties. So I'll share my screen and we'll get underway. So, with a business, you might be looking at buying a $50,000 new van for your business. The investment boost is 20%. So, you'll get an immediate tax deduction of 10,000. That does not mean you'll get 10,000 of tax back. You'll not get $10,000 cash in your pocket. It's a $10,000 deduction, which will reduce your income and reduce your tax. You'll then get depreciation. So $50,000 van, $10,000 investment boost. It means that the van's value is left at 40,000. We then depreciate that at the normal rate, which is 30%. So we get $12,000 depreciation for the rest of the year. Over the first year, we're going to get $22,000 of deductions on that new van. Just note that is excluding GST. So yeah, whenever we're doing business, it's always excluding GST. So total deductions 22,000. If your tax rate is say 33%, normal sort of tax rate, you would save $7,260 in tax the first year on deductions for that van. And obviously the van reduces in value. So yeah, it just means that your depreciation is basically allowing for that wear and tear, that reduction in value. It's spreading its cost over its useful lifetime. So this gets you 7,260 less tax. If the old ways, we did zero depreciation, zero investment boost. We would still, in the past, we would have had depreciation at 30% on the 50,000. So slightly more would have been 15,000. Tax on that, if we did it at the same 33%, under the old way, it would have been 4,950. So the difference you're looking at is about $2,300. So if you're looking at buying a new van for 50,000, this should not change your decision. You shouldn't be rushing out and buying a new van just because there's $2,300 of tax difference. You've still got to come up with the other 48,000 approximately. So this should not make you rush out and buy a new van. It should not change your investment decision. But if you are going to buy a new van, or you're right on that borderline, or you're looking at new and old, the investment boost is only for new assets. So yeah, that could be a reason why you look for new instead. And it's a little bit of a boost. So if you are buying new assets, a little bit of a tax saving, to me, not a deal breaker. It's not, shouldn't change your decisions. It shouldn't change what you're doing. Residential rental properties, unfortunately, you can't claim on the build. And a note down the bottom, I would just check for the final rules. Generally, politicians do not like landlords and residential property owners, so just be careful. Potentially, chattels on residential rental properties could be excluded. But if we did the same thing, investment boost 20%, $1,000. We then have $4,000 left on our new carpet. Depreciation for a carpet is 25%, so that's $1,000. Our total deduction is $2,000. If we're at 33% tax rate, $660 tax saved. Under the old ways, we would have got zero investment boost. We will still would have got depreciation on the $5,000 cost at 25%. So yeah, we're looking at, we would have in the past got a tax saving of $413. The only difference between these two is $248. So for residential rental properties, if you're going to buy new carpets, heat pumps and things, yeah, you are saving a little bit of extra tax, but there's not a lot of difference. If you're already running at a loss, that loss is just going to accumulate. It's not going to mean immediate tax savings. So residential rental properties, unfortunately, not a big change. Driveway would be one where there's a bit more of a benefit because the depreciation rate is so low, but still not a reason to do a new driveway, just a bit better. Last one, commercial property. Commercial property is the big one. This is actually a game changer. So rather than doing new carpet, if we did a new build, and say you built it for 1.5 million. Note, this is just the building, it's not the land as well. In the past, we would have got zero investment boost. We would have got from the 1st of April 25, zero depreciation. Oops. So we would have got zero tax savings. It wouldn't have made any difference whatsoever on that one. This new one, we get 20%. So $300,000 initial deduction. We still get zero depreciation. So no benefit there. But yeah, we get this $300,000 new investment boost at 33% tax rate. If you're making a big profit, it's potentially going to save you $99,000 off tax in that first year. So if you were debt free, you have lots of cash, you bought this property, which obviously there'll be some land. You can't get the investment boost on the land. You then build the new build on it for 1.5 million. You'll then get the investment boost on that. You would still get chattel's depreciation done if you're a long-term landlord. It's the easiest, simplest tip to change tax. But yeah, you're looking at potentially saving 99,000 tax or not paying tax for the first 2 or 3 years. It is awesome. Just watch out for depreciation recovery. We've put it in our Facebook post. So depreciation on buildings has sort of gone on and off for commercial, but generally what happens is we're depreciating down and down and down in value. Sooner or later, you sell it hopefully for more, you recover that depreciation, you have to pay the tax back. It is still a good thing. It's an interest-free loan. You'll get use of that 99,000 of tax saving until you sell the property. So if you hold it for 10 or 20 years, you can use that 99,000 to do other things. Even if you just invested it in the bank, it's going to save you, earn you some interest, and be a good thing. So yeah, to me, depreciation is a great thing if you can do it. Yeah, depreciation recovery for chattels and business assets, not really a thing they actually wear out. Commercial property, this investment boost, yes, you will recover it, but it's an interest-free loan. It's a good thing. You'll pay it back later. Could be 10 or 20 years later. You've got the use of that money for all that time, which is great. So hopefully you found that useful. Thanks a lot. Bye.